Looking now at the markets in Kenya, where we know that those elections and the result of those elections coming through at the weekend, indeed, showing that Uhuru Kenyatta is the new president of Kenya. We've got that market unsurprisingly up a very strong 3% on the day, 4,796. Remember, this is the first day of trading after the confirmation of those results, which came in at the weekend, that Uhuru Kenyatta is the new president of the Republic of Kenya. Let's look now on the currency front and see how the currency is doing, and surprisingly as well, stronger by almost 0.75%, 85.45 against the US dollar. Long dollar positions giving way after Kenyans largely behaved, but let's see how long that peace will hold. We certainly hope that it will be holding and it will be sustained. Let's now see if we can join our studios in Nairobi, where you can get an update on the Kenyan markets, and we've got Kenneth Minjire, is fixed income analyst at Stanlib. Kenneth, thanks for your time. You'd imagine, of course, the fascination today with most people is to see how Kenyan equities are trading, as well as, of course, particularly the shilling. And we do see that shilling stronger on the day. We also see equities stronger on the day. Are you surprised?
No, not particularly. As you've mentioned, the market performed quite well today, up 137 points, which is really strong. And no, I'm not quite surprised. I think probably what we might not have expected was such a strong showing from retail investors. They actually contributed quite a bit to the rally we saw today, which usually is a bit worrying in some circles. That we didn't expect retailers to be so strong in the market, but local institutional investors also came in quite strongly, taking up positions on a lot of the counters. So I think we'll watch the market going forward.
Absolutely. I think we're all going to be watching that market. We do know that last week volumes were down, though the market was stronger. And we're going to have another conversation with another guest in the studio about the performance of that market. But just going back to those elections, I'm surprised by the gains here, particularly given the margin of victory. I mean, we're talking 0.7 percentage points difference between the two candidates, which in any part of the world, I would imagine, would be straightforward, straight away mean a challenge from the losing contender. We saw it happen in the US. We've seen it happen in other parts of the world. Are you surprised by these gains, particularly given that narrow margin of victory?
No, not particularly. If you were keeping track of the poll results before elections, I think there was a survey that was done actually about 5 days before the elections. It pulled the two main contenders quite close. I mean, there was a difference of very few percentage points between the two. I think an average of about 43.8 and 44.4% on average across all the surveys. So the close gap between the two was not expected, and as you've mentioned, what happens in such circumstances, what is most likely to happen is that there's always a petition or a contention, and that's what we've seen happen locally. As I think you know, it's been in the news that the losing side will be going to court. We'll wait and see what will come from this, but we know that the Supreme Court should come back with a judgment within 14 days after the election, so it will be pretty soon. And I think a lot of them also, if you look at the markets, a lot of people will also be watching to see what will come from the Supreme Court. I think it could go either of two ways. We could probably have another runoff election, probably between the two presidential candidates, or the election results could be upheld by the court, which would be quite positive for our markets.
Absolutely, I'd imagine for everybody who's African as well, because it would demonstrate that Kenya is a mature democracy. Let's talk about where to make money in the Kenyan market even now as we wait for finalization and the conclusion of that election. What would you be looking at? Would you look at equities? Would you look at fixed income? I know you're a fixed income guy, so perhaps you would tend more towards being cautious.
Probably, I think in the equity market, I would actually take quite a cautious view. The prices we're seeing 2-year highs on some of the counters. The market did, a lot of the counters did about almost 10% rise today, which is more or less near the cap put by the CMA on the movement in price in a day. So I would be quite cautious going forward. Also, I would be watching, as I mentioned, what comes from what the case we're expecting in the Supreme Court. On the fixed income side, I think the returns are quite attractive. If you're looking at 1 year, one-year T-bills at levels of 12.5% and above. That's actually a positive, a real return compared to where the inflation numbers are. So what I probably would take quite some positions on the shorter end of the yield curve, which is quite safe, and on the 91-day, on the 182-day. Also, we are seeing some good numbers on the repo. So I think I would actually be looking at this, the shorter end of the yield curve, in anticipation of where the equity market will go. The sentiment for the equity market for 2013 is quite positive.
Yeah.
Of course, so based on what we expect over the next 2 to 3 weeks, will determine what we'll do probably moving into the second quarter of the year.
Correct me if I'm wrong here, Kenneth, but I'm noting that you are concentrating your activity around the shorter end of the market, suggesting that you're not taking a longer term look at the Kenyan market and believing that that stability will continue. Am I getting this wrong?
No, you're not. Actually, I think I would be very cautious on the longer end of the yield curve, based on the devolved government, the new system of government that we expect in financial year 2013-2014, and also the new borrowing target for this financial year. I think cumulatively, Treasury had borrowed about 105 billion by the close of 2012.
Yeah.
But if you take into account the new borrowing target, where we actually stand at about 75 billion, also with the heavy redemptions we've seen in the first quarter. So this is also, this may place a bit of pressure on the yield, on the interest rates. So I think, yes, and also the uncertainty of the new system of government in the second half of 2013. This would limit me to the short to medium term.
Yeah, thanks, Kenneth. Finally, before I let you go now, we had a story today from Reuters suggesting that Kenya plans to issue $1 billion sovereign bond following on these elections that were largely peaceful. Now, if I remember last year, after Zambia went to the market for the first time, there was huge demand. I mean, there was a fascinating story told about how yields moved on that Zambian offering initially. And then as the day progressed, it was absolutely amazing to see the level of interest that was being exhibited towards African assets. Now, in Kenya's case, an election has just come on a constitution that many people have lauded as very, very strong indeed. What kind of demand do you anticipate, perhaps from foreign investors looking at Kenya and looking at Africa in general?
I think Kenya being one of the main frontier markets in sub-Saharan Africa, we would expect huge amounts of interest in sovereign debt issued by our government. And also looking at the Kenyan economy, which is a lot more attractive than, relatively speaking, to probably the Zambian economy. So we would expect a lot of interest in any sovereign debt issued by our country, and also the peaceful elections we've just had. And if the case is, if everything goes well and we get, everything is sorted out, we get a new president sworn in, which I expect is what Treasury was waiting for. And our the risk appetite from foreign funds we've seen for assets in frontier markets has grown in leaps and bounds. And we'd expect a lot of interest to be shown in the sovereign debt.